Good morning and welcome to the Forex Market Wrap, brought to you by Pepperstone on Monday the 21st of August 2017. I'm Darren Sinden. Let's start by taking a look at overnight changes and price moves to be aware of. Last week really, I think we have to consider the price action to have been range bound. Bigger movers were cable, dollar rand and sterling yen, but despite all the news flow, macroeconomic, political and otherwise, we'd have to say it was a pretty dull week net in terms of price action, but maybe we can hope for a bit more excitement this week. One pair that might give us pause for excitement or cause for excitement is cable. That's sterling US dollar, and I've just drawn this chart here to show what I mean. We're at a pretty important point here with the price resting around the 200-day EMA line. An indecisive candle to finish the week on Friday, and so a doji star, I think we'd call that. And so, uncertainty there, potential really for the pair to break down below that 200-day EMA, test to 128, and if it broke there, then perhaps to come back to this line of old support and resistance just below 126. So that's something to think about over the course of this week. Right, events on the calendar, things that may move the market today. Well, they're not too much today on the calendar, to be fair. Pretty quiet. We have, first of all, at 8:30 GMT, the public sector borrowing requirement for the UK. That's the amount of money that the UK government needed to borrow in July to balance the books. We've got the Bundesbank monthly report coming out of Frankfurt at 10 a.m. GMT, and then into the afternoon at 12:30 GMT, we have the Chicago Fed National Activity Index. It's another one of these regional Federal Reserve activity reports that are followed quite closely by the market. And at 15:30 we'll have regular 3-month and 6-month bill auctions in the US. And again, the market will pay some attention to that just to see how easily the US is funding at the moment. Breaking news and comment that's caught my eye then. First of all, more good news from the emerging markets. Thailand grows at the fastest pace for 4 years in Q2, with the economy expanding by plus 3.7% in that period. If we dig down a bit deeper, we find that hospitality, which is obviously very important to the Thai economy, grew by 7.5% over the second quarter. The S&P 500 index closed last week at a 6-week low as investors remain concerned about White House inertia. Crude oil prices have eased slightly this morning after short covering on Friday. And moving back to Asia, New Zealand tourist arrivals rose by 3.8% year on year in July, and that's the second month of good gains we've seen in a row there. President Trump in Washington is to outline the way ahead over Afghanistan today, and whilst that may not be too significant from a policy standpoint, it may be quite telling if he can act in a presidential manner. Right, food for thought, something to take away with you into the trading day. Chinese authorities may have been pleased to see the departure of the policy hawk Steve Bannon from President Trump's team last week. But new analysis conducted by the FT today suggests that China would have the most to lose in any trade war with the USA. And the chart opposite just shows the relative exposure of China to certain key markets as far as GDP is concerned and value-added exports into China. And there's the pecking order. Interesting to see it's actually Japan that probably has the biggest impact on Chinese GDP. Thank you for your time today. Please take a moment to read this warning. Trading CFDs and FX on margin can be a risky business. If you're in any doubt about those risks or have any other questions about Pepperstone and its services, then please call your Pepperstone account executive.